The broadcast is now starting. All attendees are in listen-only mode.
Hi, this is Alan Gassman, and it is Wednesday, August 6th, 2014. I'm here with my partner, Ken Crotty, and our programmer, David Archer. And the purpose of this webinar is to show you how the EstateView software works, to give you a brief overview first, and then a deeper dive. Ken and David, welcome to the webinar. Thanks very much for appearing.
Thanks, Alan.
Thank you.
Okay, so right now, if you're an attendee, you are seeing 4 different screens, and they're all really small, and we're going to make one bigger soon, so just relax. But the top left-hand side is our information entry system, which I'll show you soon. And then to the right of that, we have one of the illustration systems, which is a graph style system. To the right of that, we are showing you some other selected options you have, which are very easy to use. To the right of that, we are showing you what the no planning illustration option looks like for the data that we have in the computer at this moment. The bottom left, we are showing you the letter that automatically is prepared by the computer once you have your options selected. And then the bottom right, showing you a separate module, which will soon be integrated module, and that is the installment sale to the defective grantor trust. And for those of you who have a short attention span like me, or just want to get a 30,000-foot view, I'm going to give you a look at how it works very quickly here. As soon as I find the right place to switch to, and I'm going to go to screen 4. So right now, you should be seeing the information gathering screen. And I want to just make sure that you are. Okay, so you're seeing the information gathering screen. At the top left, it's very easy for you to customize your name, the name of your law firm or your CPA firm or your financial planning firm, the individual name, the client's name, the client's spouse's name, and then more information, their ages, and you just click up and click down, so you don't need to worry about entering. You never have to hit your keyboard once to do this, except to put the names in. Male or female, so you could have 2 males and 2 females now with the new same-sex laws, whether they use tobacco or not, how much of their exclusions they've used, of their 5,340,000 exclusion, and then projected date of death. If you want to put that down, you can. And then the other spouse. So the other spouse, you do the same thing. You just open up the box, and it gives you all that ability. And then we go to their house. Almost everyone has a house. And what the current value, house box I need to be at, the value of the house and the growth rate of the house. And 3.03% is about the 30-year growth rate for houses in Tampa Bay, Florida. You can change that if you want. Just click it up or down. And then business and investment assets, how much they're worth, what their growth rate is, what the annual fees and taxes are going to be. That 10.98% is the growth of the S&P 500 over the past 30 years, amazingly enough. But we can bring that down. Now, see when I change the percentage that the chart on the right is changing? That's because this computer will always show you exactly what the situation is with each change. By the way, I can also move this to the left, which gives me more room to the right. Now, I can also determine whether a portability allowance will apply, and as soon as I click that, look at that change on whether there's portability allowance or not. What you're seeing here on the right-hand side in green is the assets, and in red is the estate tax part of the assets. So in other words, if both spouses die by this year, 2025, then the estate tax is this red section, and the green is what's left over with no planning. That's assuming a portability allowance. On the other hand, if you take the portability allowance away, the estate tax is much larger. So it's pretty darn interesting the way this works, and very graphic for the client. Now, your credit shelter trust can go up to the maximum amount based upon your anticipated inflation rate and the exemption that the first spouse had. And you notice that as I change the credit shelter trust, the chart should change. And then you can provide for gifting. So in the gifting box, are you going to do discounted gifting, and what's the discount rate? Are you going to have already gifted some assets that you want to keep track of? How many crummy powers do you have? What percentage of your gifting is going to crummy powers and discounting, and what percentage of your gifting is going directly to beneficiaries who will spend it? Then also I have life insurance entries. The first spouse's life insurance, whether it's in a life insurance trust, whether it's a level term product with a level death benefit, or if not, if it's a different type of policy, I can put in the number of years, and I can also put the exact premium amounts and the exact death benefit, so that this actually is customized to your client's actual life insurance policy and force projections. So you can see exactly what's going to happen here based upon the year of death. We have that same life insurance module for the other spouse and for second-to-die policies. And then I have miscellaneous, what's the consumer price index, because that controls the increase in my exemption, and what is the estate tax rate. And if you're in a state that has an inheritance tax, you can ramp that up. Okay, so that's the information entry system. As you can see, it takes all of 5 minutes or maybe 10 for your secretary or you to put all the information that you want there. So now I'm going to show you the primary module we use, and I'm going to move things around a little bit if you can bear with me so it fits on your one screen, because I'm using 4 screens. This system works best on dual screen, but it's completely adaptable to whatever number of screens you want. But now, as you can see, what I have is my data entry on the left and my no planning module if these people do nothing on the right, and that assumes no portability. So $750,000 house at the top, $9,250,000 of investments. These people are adding $100,000 a year until the first spouse dies. At that point in time, based upon the year of death, the residence will be worth $1,035,000, investments worth $20 million. Annual growth rate 3.28%. They're going to be taking out $133,000 a year. Mrs. Sanders will start spending money when her husband dies, maybe having a little bit of fun with the pool boy, who knows what. Annual growth continues, and what happens on the second death? Estate tax estate is $30,290,000, estate tax $12 million, beneficiaries get $27,034,000. That's assuming she loses the portability allowance because she remarries the pool boy and he dies before her in a tragic pool accident. So instead, we can go over here and say, well, let's say there's no portability. Let's say there is a portability allowance. Instantly, the numbers change to a $9,003,000 estate tax. And then you say, what about if they use the credit shelter trust? All I have to do is click Credit Shelter Trust over here on the top right, and lo and behold, it's now showing me a picture of the Credit Shelter Trust. I'll make a little bit of room here for you. It's showing me the Credit Shelter Trust at $6,390,000 on the first death, $12,842,000 on the second death. Estate tax is down to $6,778,000. What if at that point in the conversation the client says, you know what, I think my residence isn't worth as much as I told you. I told you $750,000. I think it's only worth $500,000. Okay, I'll click the $750,000 to $500,000, and every number here changes because it is constantly tracking what's happening there. Now I want to go back to my controls. I'm looking for my controls. There they are. Now what about if we do annual gifting? All I have to do is click there, and it's showing me again what the annual gifting result would be, and that reduces the estate tax to $4,363,000. That's without discounts. If I'm going to be discounting LLC interests or family partnership interests at that 35% discount I indicated, then I click there, and it gives me the numbers for the counts. So I think you can see, and then life insurance, if I click life insurance, it then gives me the life insurance trusts. Now it's kind of neat that instantaneously all of these slides on the right, no planning, bypass, annual gifting, discounted gifting, and life insurance. I wish I could make that larger for you, but I can't right now. But anytime I change any item in the input section on the left, that changes all of those pictures immediately and changes this graph. Now let's look again at the graph. I think I can click there and make it larger. What this graph presentation is telling me is that the gift trust is there at the bottom. It's estate tax free. The residence and personal assets are in the yellow. The estate taxable assets are in the green, and the estate tax is much lower. If I go to annual gifting, it goes a little bit less. If I go to discounted gifting, it goes a little bit less. If I go to life insurance trust, it changes as well. Now, life insurance, you would think that the life insurance trust would always save estate tax, but if the person lives past their life expectancy, that's not the case. Now, let's say that I want to know what would happen if the first dying spouse died earlier. All I have to do is click on that first death line, move it to the left, and it changes the whole situation, and you see that you would have no estate tax if the first spouse dies earlier. What if I want to change the date of death of the second dying spouse? I can just move that to the left. And son of a gun, look what happens. It completely changes it. What if the first spouse dies before the second spouse and they change the order of death? Boom. It happens immediately. So you have those two different ways to view what's happening. Now I want to know how the calculations came about. I go to the diagnostics mode. I can click, for example, lifetime taxable gifts by the second spouse, and it will tell me exactly what has happened and how it got to the number that it got to. I'll give you a better example. The gifting trust, there's the number by year of the gifting trust for the number of years that we are illustrating. Okay, the next feature is that I want to write a letter. I want to write the client a letter describing the exact scenario that I just laid out, each of those planning procedures. I click on Generate Client Letter. I click on Save. I click on Yes. And then the letter automatically comes up. And the letter shows you, let me see if I can get the letter up there for you. I will change screens here. Just a second, if you'll bear with me. Two. Screen. What screen are we? Sorry about this. This is operator error, not computer error. But here is the letter that prints up. It's a Word document. It explains what you've done. Explains a little bit about the estate tax. It explains their assumptions. And then it says, if you do no planning, here's your situation. If you do the bypass trust, here's your situation. If you do annual gifting, here's your situation. And if you do discount gifting, here's your situation. So then if you want to change the letter, just change any assumption, rerun the letter, and you can compare the two letters in Word. This all stores directly onto your hard disk of your computer and is there for you later. We can also save the settings. If you want to save the settings, there's a way to do that, which Dave and Ken are going to describe in just a minute. Okay, those are the primary features of our primary module. And by the way, as everyone probably knows, you can use this for free as long as we're developing it. Probably be developing it another year by my estimate, but it's extremely user-friendly, and you can use it for free. Until then, we're just glad to have the beta testers. Okay, then I'm going to change screens again. I'm going to go to, see here, screen number 4, no, screen number 4, am I at? Oh, okay, just looking for the screen. Screen number 1. This is the installment sale calculator, and what you have here is the input on the top, and you've got a readout on the bottom. And the readout can scroll up and down, or left and right, bigger and smaller, so to speak. Here, let's assume a client has $25 million of assets. They're going to grow at 8%. Income tax is 1%. They've already used their lifetime exclusion, or I could make that 500. They're going to put in a 600,000 seed capital gift. The value of the gifted entity before discount is $6,769,000. Discount rate 35%. The sale value, taking a 35% discount, is $1,004,000. If you wanted to increase the underlying asset value, you will see that the sale amount changes automatically. So that saves a lot of time. And if you change the percentage from 35 to 30%, you see that the gross assets change. So that works very well. Then how much of a note are you going to have? You have a $4,860,000 note here in my example. Interest rate, we could use the applicable federal rate, 2.32%. We're going with a 9-year note. State tax rate, 40%. Consumer price index growth, 2.96%. This will be a conventional note, not self-canceling. And the grantor will pay all the tax. We will not toggle off grantor trust status. So you go down here. On the left-hand side, there's his net worth. There's his assets without the note. There's the growth after taxes. There's the payment he receives on the note. There's the income tax that he pays on behalf of the trust. There's his taxable estate, his estate tax exclusion. There's his estate tax liability. And here are the estate tax savings based on what year he dies. On the grantor trust side, we show the value of the assets, the note owed, the growth, the income tax paid by the trust, which is 0, the payment it makes, the net assets, and the net assets it has if he dies in that year. Now, I can go and I can, for example, raise the interest rate to say 10 point, say it's, go down there, interest rate, not 8%. I can make it self-cancel, where it expires on his death. I can say that he'll pay the tax for the first 7 years or 8, 10, 11 years, and then the trust pays its own tax. And I can project farther to say, 24 years. Now the numbers are different. You can see that the tax he pays only until 2025. You see the estate tax savings each year he dies, and you see the grantor trust paying those taxes. Then you can change any assumption you want. Tells you he's really only worth $1 million. You can move that down. It automatically corrects for it. If he wants a larger seed capital gift, you can change that. If he decides he doesn't want to toggle off grantor trust status, you can move that. Everything changes instantaneously. Okay, that's my 10-minute overview that took 20 minutes. I guess that's 4/10 of a billable hour instead of 2/10 of a billable hour. Ken, I'm going to hand the console over to you and let you and Dave give some more advice, both technically on how the program works and also from a computer savvy standpoint, people who may know more about computers than I do how some of the features are controlled.
Thanks very much, Alan. One thing I did want to point out on the module that you were looking at with the installment sale is one thing that's unique about it is it's an easy way to show you the different results that you might have either by playing with the discount or by playing with the number of years that you're going to have the grantor pay the income tax. And so you can see the impact that certain things have very easily. You'll be able to print them out, show them to the client, and discuss them with the client, making sure the client's aware about the potential tax liability that they could have as a result of the sale with assets that they're not going to have access to because of them being owned by the gifting trust. Dave, what do you want to talk about? Something that you like.
I think the main thing that I wanted to talk about was just on the letter generation and also on this installment sale calculator. The screen that we're showing right now, I think one of the main features that we're working on getting put together currently is actually getting this integrated back into the main module. So you'll be able to see this on that chart to kind of get an idea of how that impacts the overall, so it's not just a separate calculation. So you'll be able to see the kind of overview of the entire estate. So if they combine this with the bypass trust or gifting strategy, what that looks like from an overview. On the letter generation, the main thing that's going to be coming up soon is actually getting the life insurance and the installment sale pieces into the letter. And so we'll have some more information in there to be able to share with the clients and have that auto-generated. Because right now we only go up to the discounted gifting. We don't really talk about the life insurance in the letter, and that's another main thing that's coming up in one of the next releases.
Can you explain how they would save any view or any client data settings to their hard drive so that they don't have to put the settings back in if they want to come back to it in a week or two?
Yeah, so it's a standard, if you go back to the main screen, there's a standard menu bar on there. This is pretty much like any other computer program. There's a file, open, save, save as, that'll let you go and save out all the settings that you've entered. Basically everything you've captured on the left would then get saved out to a file, and then you can open that back up at a later time.
And you can save multiple versions for the client with various assets.
Correct.
Want to see the $500,000 house versus the $750,000 house, you can go ahead and save both the pictures and the cover letter like Alan described, and you'll be able to run the compare of the cover letter to each other so you can see the difference, or just be able to print the pictures themselves to be able to put them in front of the graphs to be able to put them in front of the client. So I think that makes a lot of sense. And as far as print screens go, what capability do we have for that, Dave?
On the print screen, I believe we have a button. I think is it under Tools? No, it's not under Tools anymore. We actually need to add that back in, but there will be a capability to capture a screen, capture one of the graphics, and just be able to save that out to a file individually to be able to print that off. I think actually if you right-click on any of the charts, I think there's a save screenshot if you right-click to be able to save that out to a file. Yeah.
Perfect, and then you'd be able to save exactly what you're seeing there. And what we have on the screen right now is one thing that Alan hadn't mentioned before. We have the timeline graph, which he went through. We also have the pictorial picture or graphs, which we talked about. And if your mind works better in an Excel format, you also have the information just in an Excel format here with a basic spreadsheet showing the values that we had before as well.
This sheet also is showing the life expectancy based on their age, sex, and whether they're a smoker or non-smoker. Those numbers are going to be shown on the left-hand side in a future release.
And again, if you change any of the inputs, you see it automatically adjusts the life expectancy for the client.
Okay, so I think that covers everything we set out to do. It's remarkably easy to use. I'm not very good with computers, and I have no problem with it. Anyone who beta tests is more than welcome to let us know. We'll be glad to give you a one-on-one tutorial. We can use Go to My Computer, and we can be live on your computer or our computer. It's very easy to download. You just go to we'll send you the link if you want it. You click on the link, and then it will just download onto your computer. If you're on your law office or CPA firm computer, you may have software that blocks it from being loaded. Some people just load it onto their personal laptops. But we think everybody that has used it has been very happy with it. So we welcome you. We welcome your questions, comments, and suggestions. I know that this webinar was a little bit scattered. It was obviously not rehearsed, but it is what it is. We're done in less than 30 minutes. May the rest of your afternoon be billable. Thank you very much, Ken and Dave.
Thanks, Alan.
Thank you.